If you compare with the commercial loans with the farmers loan, agricultural loans are always at lesser price of interest. The reason is very simple, government will give subsidy. What are the examples of money market? Random course of bill brokers, money dealers, banks, all comes under money market. When you go for the short term, the returns will be less. When you go for the long term, always the returns are higher. What is a joint venture? Any contract or any obligation between 2 or 3 parties for short term is called as joint venture. A warm welcome to one and all. This is your Adasya, lecturer in Vidhyaashram First Grade College, the Temple of Excellence. We are discussing your second unit, that is your financial market and services. In this, we are discussing financial institutions. As I told you, we discuss the financial components. Which are those financial components? Your financial institutions, financial services, financial asset, financial market. These are the components. Individual components, they made it into separate unit. Now, in today's session, we'll go with financial institutions. In the financial institution, first we have to understand what is called as financial institutions. Financial institutions are business organizations serving as a link between server and investors, savers and investors. For example, there is a link. For example, you're very sound-minded. You know all the technical aspects, but I don't know anything about technical things. What I'll do? But I have money. So there is a link between me and you. Somebody, the financial institution, they make link between me and you. I'll invest, you work. So whatever profit we get, we'll share. That is called the link between savers and investors. Now, in the stock market, you cannot do all the operations of Infosys, but you can buy Infosys share. I have money, I'll buy share, but Infosys who does work, who get profit, in that profit they will share whatever the investment I made. So, these are the link between the savers and investors will be done in the financial institutions. Then, help in the credit allocation process. In simple, financial institutions are institutions which offers financial services for its client. All the financial related services will be provided or served, helped by these financial institutions. The most probable services in financial intermediation, the institution include bank, trust, company, insurance. All these things comes under your financial institutions. Silent features of financial institution. What are the silent features of financial institution? These are the silent features. As I told you, you have to remember the points. The explanation on your own you are supposed to write. Now, but it should be related to that particular topic. It is an institution as well as intermediary. Second one, it channelizes the saving fund into investment fund. Your saving fund converted to what? Investment fund. It creates financial assets such as deposit, loan, security, etc. All these things will come. It includes banking and non-banking institution related to bank, non-related to bank. It includes both organized and unorganized institution. Organized and unorganized institution both will be included in this. Established with clear operating functions. These are the major features of financial institutions. The silent features of financial institutions, the continuation. Regulated by government and regulating authorities. See, all the banking sectors comes under what? RBI regulation. Whatever the loan, whatever the borrowings, each and everything should come under what? RBI regulation. Stock market under SEBI rules, Security Exchange Board of India. As per the SEBI rule, they have to follow. As per the SEBI instructions only, they should trade. These are the things they have to follow. Then, it accept deposit. It collect or accepts all the deposits. Then it provides commercial loans, real estate loans, as well as mortgage loans. So the financial institutions which provide what? All kind of commercial loans, your real estate loan. Real estate means for the house purpose, and mortgage loans it provides. Then financial institutions keep money flowing through the economic among consumer, business and government. Financial institutions keep money flowing through economy among consumers, business as well as government. Keep money flowing means from one person to another person, one institution to another institution, it keep flowing the money, exchange of money. Importance of financial institutions. What are the importance of financial institutions? The first one, it provides funds. Second, infrastructure facilities. Third one, promotional activities, development of backward areas, planned development, accelerating industrialization, employment generation. These are the major importance of your financial institution. What they do? They provide funds. They give all the infrastructure facilities. They give promotional activities. They develop the backward areas. If the areas are without industries, the areas without any infrastructure, these financial institutions will provide loans at lesser rate, like for the farmers, agriculture purpose. If you compare with the commercial loans with the farmers loan, agricultural loans are always at lesser price of interest. The reason is very simple, government will give subsidy. Outside it is 10%, for the farmers they will give it at 3 or 4%. Remaining 5% will be paid by whom? Government. Government will facilitate farmers. Then planned development, accelerating industrialization, employment generation. There are many financial institutions are there, means employment also generated, more people are employed. Now, characteristics of financial instruments. Now, the important characteristics of financial instrument are as follows. Characteristics of financial institutions or instrument. First one, liquidity. Your asset will be transferred to cash, liquidity. Marketing can be done. Maturity period, risk, future trading. These are the major characteristics of your financial institution. Liquidity, marketing, maturity period, risk, future trading. What is money market? We are coming to second part of your unit number 2, money market. What do you mean by money market? Exchange of money. Now, random course of financial institution, bill brokers, money dealers, banks, where dealing on short-term financial tools are being settled and referred to as money market. These markets are also called wholesale market. Exchange your bills, check or some call money, all comes under your money market, all related to money only. Difference between your money market and capital market, this is a very important one for your 10 marks in your examination. If they ask you what is money market and difference between money and financial market, 15 marks. If they ask you only the difference between money market and financial market, this will be your 10 mark question, important. Now, money market, random course of financial institution, bill broker, money dealer, banks, etc., wherein dealing on short-term financial tools are being settled, is referred to as money market. What are the examples of money market? Please remember, this will be your 2 mark question. What are the examples of money market? Random course of bill brokers, money dealers, banks, all comes under money market. What about capital market? A kind of financial market where the company or government security are generated and patronized with the intention of establishing long-term finance to coincide with the capital necessary is called capital market. Money market is always short term. Buy today, sell tomorrow. Buy today, next 15 days you have to, whatever you borrowed, within 15 days you have to give it back. Within 3 months you have to give it back. Within a year you have to give it back. These are called as money market. Always short period. What do you mean by capital market? Capital market in the sense all the long term related, not for short term, it is a long term. Long term in the sense you invest today, after 10 years you see what is your investment. You invest today, after 3 months what is your investment. These kind of things happens in your capital market. Then market nature. Money market is informal, but capital market is formal. Everything, there is a set of rules, regulation, certain standards are given. So your capital market always formal. Money market is what? Informal. 2 points over. Next, commercial paper. What are the example or instruments of money market? Instrument of your capital market. Instruments of money market, all your commercial paper, treasury bills, deposits, trade credits, all comes under your instrument under money market. What is under capital market? Capital market, bonds, debenture, share, asset, secularization, retained earning, euro issues. These comes under your instrument of capital market. Investor type. Under money market, we get all the commercial bank, non-financial institutions, central bank, chit fund, all comes under your money market. Under capital market, stockbrokers, insurance company, commercial bank, underwriters. Who are called as underwriters? Remember, you have a new startup, your shares are listed in the this thing. You want to sell your shares. How do you sell your shares? You will appoint underwriters. Underwriters, they work as an agent. They will sell your shares. They will give commitment that this many shares I'll sell. These many shares I'll take responsibility to sell. These are called as underwriter. They work on commission basis. Next, risk market liquidity. Money market is highly liquid. As I told you, very short term. And capital market are comparatively less liquid. Risk involved. Money market have low risk. Capital market are riskier, more risk. Again, the continued maturity of instrument. As I told you, your money market instrument mature within a year maximum. Your instrument takes longer time to attain maturity, maybe 10 years, 5 years, 15 years. Now, purpose served, achieves short term and it achieves long term. Functions served, increasing liquidity of fund in the economy, stabilizing economy by increasing saving. Then returns, return on investment. Whenever you go for short term, no returns always less only. Return on investment usually low. When you go for long term, the return on investment is always high. Remember, when you go for the short term, the returns will be less. When you go for the long term, always the returns are higher. Now, once you're done with your money market, what is money market you learned? What are the difference between money market and capital market we learned? Now, the next topic is Industrial Finance Corporation of India. Usually, if you say Industrial Finance Corporation of India, you feel it is a new word. But if you go with IFCI banks, IFCI banks means what? These are called as your Industrial Financial Corporation of India. Now, the Industrial Financial Corporation of India banks main goal is to provide medium fast loans and advances to industrial manufacturing enterprises. For enterprises, they give fast loans. At a lesser time, they will provide loans. Then, before making any loans, it considered several variables. All the variables they check and they provide loan. They research the significance of the industry in our country economy, the project's overall cost, and eventually the service performance and administration. These things are taken care. Then, if the result of the above factors are satisfactory, the IFCI will approve the loan. Whatever the rules and regulation documents are completed, fulfilled, then you will be provided loan and your loan will be approved. The IFCI bank can also invest in these companies debentures on the market. So if banks are providing you loan, where they will get money? Yes, they invest somewhere else. So whatever deposit they collect from you, they will invest somewhere else. From there they get returns. Now, IFCI Bank also backs up these industries enterprises loans. And Industrial Finance Corporation of India, same IFCI. Now, the Industrial Financial Corporation of India might choose to underwrite security. You know what is underwrite? Just now I explained you. They work as an agent. It also ensured deferred payment. Deferred payment means, always remember, it is in between your revenue as well as capital, in between. Usually it goes with long term. It is not completely long term. It is not even completely short term. In between we call it as deferred. The best example for your deferred payment, all your preliminary expenses. All your preliminary means at the time of commencement of your business, initiation of your business, whatever expenditure you spent, those are called as your deferred or preliminary. Similarly, we'll go with the example of advertisement. Advertisement also one of the part of your deferred payment. Now, the Allied Services and Merchant Banking Department is a separate division. They handle issues including capital, restructuring, loan, syndication. Like you already taken loan, after 10 years, you are not able to pay your loan or your EMI is very high. You can go to manager, you can give a request letter, please restructure my loan. What they will do? They will restructure your loan by making some change, or they will extend your tenure or else your EMI period, or else they will restructure the interest part. All these things will happen in this. The Industrial Finance Corporation of India has promoted 3 subsidiaries to boost industry growth, like Financial Service Limited, IFCI Insurance and Services Limited. Similarly, it responsible for the operation and regulation of these 3 companies. So these are the major things you are supposed to remember. What is Industrial Finance Corporation of India? The points, again there is a continuation. What is the full form of IDBI? We are done with your IFCI. Now we are going to IDBI. This is also famous one commercial bank. The full form of IDBI is a Industrial Development Bank of India. Mainly this institution is devoted their time for industrial development. So IDBI was founded in 1964. If they ask you 2-mark question, what is IDBI, or when it is established, you have to mention that it is founded in 1964. It provides financial and credit facilities for growth in the Indian industry. These banks mainly concentrate on what? Industries. IDBI products are what? Like various products are offered by IDBI and few are listed, like saving account, debit card, credit card, lockers, fixed deposit, loans, agriculture loans, etc. These are the product. Product, it is nothing but services which are provided by IDBI. What is Exim Bank? This is also very important. Export and import. Exim Bank is popularly regarded as Export-Import Bank. It was established in the year of when? 1982 under the Indian Act of Export-Import Bank of Indian Act, and has been set up to provide long-term finance to exporter as well as importer to meet their financial need related to international trade of the country. For example, you have any international trade, you are exporting some goods, you are importing some goods. If you need any financial assistance or if you need any help of finance, these people, the Exim Bank will help you. Rules and objectives of Exim Bank. This is also one of the most important one for your 10 marks. The role and objectives of Exim Bank are as follows. Now, ensure the export and import projections. Second, encourage and facilitate the export of international and technical and merchant banking. It encourages. It lengthens the LOC, line of credit and credit of by years. When you transfer goods from one country to other country, this rules will come, LOC rule. Now, to make competition for export on the financial terms, then to provide timely and relevant information to exporter of India about their opportunities. These are the major things you are supposed to remember. Roles and objectives of Exim Bank. Now, to provide advice on currency related issue so that producers or manufacturers in India may perform the cost effective export and import. To look into Indian finance, to enhance and promote. These are the major roles which take care by Exim Bank. Functions of Exim Bank. The same thing, whatever roles are there, no, same thing will repeat for functions also. Financial export and import of services, goods from country in Exim trade. Helps in financing. Also helps in refinancing. It helps financing the export import of services and goods from other country also. It provides financial asset for the business in foreign and also helps in business to join the joint venture. What is a joint venture? Any contract or any obligation between 2 or 3 parties for short term is called as joint venture. There is a huge difference between joint venture and partnership. Partnership usually for longer period, but your joint venture is always for short term. And it also helps in providing the finance for technical asset to exporters and importers. Yeah. Again, your function. See, the Exim Bank, as I told you, one of the most important topic in your unit number 2. Now, it helps in providing finance for technical asset. Exim trade helps in functioning the export and import. Exim Bank also plays major role in writing shares. It also offers the LOC. It provides finance in cooperative bank. This bank provides the services of business advisory. Exim Bank also provides fund for the foreign country. Partners the industries of India in their competitive and supervisor globalization. And these are the points. You cannot remember all the points. Remember any 10 points out of this. What is non-banking financial company? We call it as NBFC. Whatever you learned IDFC and IDBI, and you learned your NBFC. Now, a non-banking financial company is a company registered under Companies Act 1956. Now we have 2013 also over. So, it is registered when? Companies Act 1956. So, engaged in the business of loan and advances, acquisition of shares, stock, bond, debenture. If you want to buy shares, stock, bond, debenture, these people will provide you loan. Security by government or local authority. These are the major role of this NBFC banks. So, this is all about your today's session. We learned many things. I'll go back to all the previous session. We recap once. If you want, you can take screenshot also. The meaning of your financial institutions, silent features, importance of financial institutions, characteristics, what is money market, difference between money market and capital market, what is IFCI, Industrial Finance Corporation of India, what is IDBI? IDBI stands for Industrial Development Bank of India. What is Exim Bank? Roles, functions of Exim Bank. What is non-banking financial corporation or company? So these are the topics you are supposed to remember and learn. Now, before I'll end, I'll tell you which are the most important. You have to mention what is the financial institutions. In that, IFCI, IDBI, non-banking financial companies. Then you have to go with Exim Bank. These are the 4 topics you are supposed to learn in this unit. Thank you.